Morning, it's Vijay here. Today is Friday, 6th of December 2024. Welcome to yet another episode of Pre-Market Commentary. It's actually not just yet another episode. Today is an important episode for me because it's about the RBI. The RBI is meeting today. The whole world seems to be looking at what RBI can do, and therefore you will see a lot of talk before RBI governor comes in. So, what will RBI MPC do on December 6th? I've been a votary of, going against this RBI because I think they're doing nothing sensible. Too much of hype is created on the RBI, thinking that they know everything about economics. They have forgotten the ground reality, and that is borne by the GDP numbers and the inflation numbers and their measures to tackle it. So there will be somewhat, an explanation, longer explanation on what inflation and food inflation is all about. So I believe that what RBI is doing is exactly what Gandhiji's three monkeys are doing. I will not name who those are, but this is the favorite term of the RBI governor, where it invokes Mahatma Gandhi. So I am also invoking Mahatma Gandhi today. I am not attributing the anything sinister to what the RBI is doing, but I'm only giving you practical understanding of what inflation is all about. So RBI's headache is food inflation. Now, food inflation cannot be tackled by RBI because reducing interest rates or increasing interest rates makes no difference to the food inflation per se, because we may eat less, we may eat more, but the food inflation, depends wholly on what is the seasonality. What are the three major food components, what we call top. Top is T for tomato, O for onion, and P for potato. And weather vagaries decide the food prices. We have seen, in fact, I come from Karnataka. Karnataka is the top three states in tomato and onion production. Potato, of course, Uttar Pradesh is the number one state, and Bengal is the number two state. But I have seen when the harvest is very good, the farmers throw tomatoes on the road because at that point of time they won't even get 2 rupees per kg as far as the farmer end is concerned. So we may see tomato prices going up 60, 70, even 100, but that is only in terms of whenever there is poor monsoon. This year monsoons have been good, and I think what RBI is completely behind the curve. So I believe that RBI has to wake up and smell the coffee. In fact, the two outgoing MPC members last time mentioned that if you hold on to these high interest rates, we'll lose GDP by at least 1%, and that's exactly what has happened. And they were the saner minds. Unfortunately, they are not there in the MPC. So just let's look at what is the retail and food inflation. The central government has got a target of 4% plus 2 percentage allowed. So upper band is 6%, and your 2% is the lower band. So now let us look. What is the CFPI? Is the food inflation. The food inflation, if you see over the last few years, I got data from 17 to 24, last 7 years, the blue line is the food inflation, goes up to 8%, comes down to -2, goes to +4, comes down to -2, goes up to 14, 11, 11. This was in 2020 when the interest rates have been drastically reduced during COVID. And then it fell down in 21 to as low as 1.5%. Then again shot up to 8, came down in 23 to around 5.5, and then 11.5 in 23, and then it is now 9.2. So RBI is very concerned about this blue line, and therefore that is attacking the orange line, which is about 5.5% is the inflation right now. So you will see food inflation moves not just because RBI changes interest rates. RBI had reduced interest rate, but yet the food inflation gone down. RBI increased interest rate, but food inflation went up. So, I mean, there is no correlation actually, if you really look at it, because food inflation, if you see the tomato, onion, and potato prices, they just are fluctuating up and down. If you take this tomato prices fluctuate in a very different manner to the black line, which is the onion, which are the potato prices, and onion prices have their own way. So tomato went up significantly in April 22 to April 23, between that, and then it fell down. June 23, it has come down. So you will see there is no uniformity in the price movement of these three, which are constituents of the CPI. CPI is tracking retail prices of goods and services. And incidentally, many people may not know, we had the WPI as our inflation metric till around 2014, I think. And so we had great economists, great RBI governors, all going back to WPI inflation. WPI inflation is about 2% now, but nobody looks at WPI. Everybody now looks at only CPI. But we ran the country very well for 4 or 5 decades before we changed to CPI. So food has got a very high weight in CPI, and the basket of goods and services that forms talks of what is the standard of living, which is captured by the utility consumers derive from their income. Basically, what you should know is the CFPI, Consumer Food Price Index, accounts for 39% of the CPI. Now, it is not necessarily true that we spend 39% of our income on food. We would probably be spending about 20 to 25%, and government gives free food to so many people. So food inflation, it should not be a part of a significant part of the inflation. In fact, if you look at US, they look at core inflation, which is devoid of food. They exclude food and fuel. In India also you can do that, because fuel is not controlled by the marketing companies. It's controlled by the government indirectly. So if you look at this one, so if you take the then it is composing the food and drink consider about 46%. It says whatever it is, the top the TOP it consists about 4.8% of the food and beverages group, and 2.2% of the total CPI, the tomato and potato prices. So it also depends on diets. So people today have stopped eating potatoes, so the prices may differ. And this is an old definition of food inflation. In fact, these weights are based on 2011-12 consumption data, and they do not align with the current spending habits. The Household Consumption Expenditure Survey, HCES, of 22-23 suggested a 5 to 6% reduction in food weight, which could improve CPI accuracy in representing today's consumption pattern. So we should change our weightage based on today's consumption patterns. But then, you see, this is here, I've shown you the prices. The vegetable inflation goes up and down very significantly, very sharp moves. So you just have the non-top inflation also goes up and down significantly. Basically, you see, what I'm trying to get at by these graphs, though they may seem complicated, is that the food inflation is fluctuating, nothing to do with RBI policies. It is something to do with the weather. If you look at output of top, for instance, potato has been increasing because the UP and Bengal are increasing the acreage. So therefore, there is an increase of potato. Potato prices don't fluctuate so much. Onion prices fluctuate because onion is also exported. Tomato is again a very different animal. As I said, the prices fluctuate a lot. That is why the production remains more or less static. So there is no guarantee that if you sow tomato, you will get a very good price. That is why tomato production has stopped, whereas potato is not the case. And onion, the production is increasing steadily because there is a chance for exports, whereas it is not the case in in case of tomato. So what is the RBI meet? RBI is talking of, it has gone above the RBI upper band at 6.2. That is mainly because of food inflation, as I keep repeating. And India's GDP growth has crashed to 5.4, and RBI is still thinking we will get 7%. So I think RBI has failed, and we should stand up and say that where they have failed, where they have succeeded, we should give them benefit. Where they have failed, we should point out. If we do not point out, then I think we will go down the road of doom. So what are the what kind of cuts people are expecting? You can have a look at this chart. It looks too much of information, but nevertheless, for people, information junkies, I would like to give this chart of this data. But personally, a CRR cut of 50 basis points should do the first trick, whether RBI stands on their ego and says we will not reduce the repo rate. In fact, experts, including RBI Governor Rangarajan, the finance minister, the commerce minister, the chief economic advisor, have all asked for food inflation to be taken out. Then the inflation will fall dramatically, well within the government's band, which has been given to RBI. and they should actually eliminate that concept of food inflation for determining interest rates, because that is the only practical way to do. They should have reduced the repo rate by at least 100 basis points. People are now looking at 25 basis points. Most people are not expecting any reduction in repo rate, but I think at least the CRR should come. If they don't give a CRR and if they don't give a repo rate, then I'll tell you the economy will go down hurtling, and the stock markets can look at those numbers of 21,000, which most bears are talking. So I also feel that the RBI governor should not be given a second term, because I think overall he has done some good job, but I think in the last 2 years, for instance, they have been behind the curve as far as inflation expectations are concerned. So I think we need change for the better, because they change the MPC members, external MPC members regularly. There is no reason for them to not change the governor, but you never know in India, whatever happens. So what are the things to watch out for? What does RBI governor talk of? The inflation and GDP growth. And if they're talking of depreciating rupee, in fact, rupee is not really depreciated. Typical depreciation of rupee is 5 to 7%. But this year they have held on to 2%, thereby wasting a lot of resources. The forex resources, I don't know why they're doing that. A gentle downward drift. There is no harm. There is no ego here. You should not look for ego when you're looking at economics and making economic decision. So even if rupee goes another 5% from here, it should not matter in the long run, because that is what the trend is. Trend is always 5 to 7%. This year we held it at only 2%, but still people are getting alarmed that we're going to 85, 86. But that should not be a cause for alarm based on global economics. And there could be other measures to boost liquidity, which will be keenly watched and parsed by the commentators. We'll know what it is. So now coming back to market, enough of RBI. So yesterday was a crazy move, which was between 12 and 12 noon and 17 minutes. The market went up by 300 points. Then from 210 to 237 in 27 minutes, it fell down. It took another 200 points, and from 237 to 257, it fell down by minus 330 points, and then it bounced back plus 200 points. So that has been very crazy yesterday. Actually, there's nothing to be crazy about it, because I've been warning that between October and December, there will be volatility, and we've seen this volatility already this year. Incidentally, in 2007, we saw a volatility of 4% move per week on a single day for 16 weeks. So 16 times you had 4% moves. 4% means about 1,000-point move. Yesterday, we have not seen a 1,000-point move, but nevertheless, I'm talking of the range. Yesterday, the range was very less, but within that, it moved 1,000 points maybe. But we have seen it in 2007. Nothing to really get alarmed. I'll do a special, discussion on this on the weekend. So anyway, Nifty ended above 24,700, highest closing since October 2021. Sensex rose by 810 points. Mid-cap gained. IT index hit a record high. Bajaj Auto is the most beaten down stock, like HDFC Bank, Reliance, and now Bajaj Auto. I expect Bajaj Auto to surprise on the upside in the next 1 month. The disclosure here is that we hold Bajaj Auto, and also the disclosure is that we are not SEBI registered advisors. Insurance stocks, they reversed their gains. All of them came down, and certain specific stocks, Indus Towers, ended higher because they're getting money from Vodafone. IGL jumped because of the bonus, and so on and so forth. Zomato and Swiggy hit record highs. I don't know why people are jumping on to that bandwagon at these levels. Market breadth favored advances. Advance decline ratio was 1:1. FIs came back with a bang with 8,500 crores buying, and now FIs have been buying in the last 4 or 5 days. So I think this momentum should continue. DIs, of course, were on the other side with 2,300 crores sale. If you look at what happened in the last 3 days, Bank Nifty has gone up by about 2.85%. And if you look at from 21st, when the markets bottomed out, Bank Nifty has gone up by 6.4. Nifty has gone up by 5.82 from 21st. And the DAX is number 2. In fact, Bank Nifty, Sensex, and Nifty are in the top 4, which we couldn't have imagined, because we always thought the US markets are doing well. We thought the European markets are doing well. We thought the Chinese markets are doing well. Dow Jones is last in the list. You can note they've just gone up only 2% since October 21st. November 21st. And India is very well placed. So how did the global equities do yesterday? Today is the employment numbers. So there was caution They had hit all-time records the previous day. So yesterday Dow Jones lost about 0.5%. S&P and Nasdaq were almost flat, whereas the European markets did quite well. Commodities, Brent broke 72 and was trading below that. Gold also took a break. Silver is steady, and that is what has happened. So now looking at the three monkeys, what I would think we should do is that you don't see the Sensex daily, don't listen to the media hype, don't ask for what best stocks or what best funds. Just invest and invest more for long term. India is a growth story, and so therefore invest more for long term, and you can relax. So whatever you do today, I hope it is successful. Thank you for joining me. Have a good trading day.